Hi everyone, welcome to our channel where we help your real estate investments work harder for you. I'm Samantha from Elevate Realty in Toronto. There's been a lot of important topics on the news recently, so you might not have heard much about Toronto's real estate. Real estate markets froze in April, so how did May do? In this video, I'm going to dive into Toronto's May sales data and explain how COVID-19 has impacted real estate so far. So if you're ready, let's get started. We saw a lot of positive news in May with new COVID-19 cases going down, announcements for further reopening, and stock markets recovering back to pre-COVID levels. On the real estate side, overall sales activities went up by 45%. But it's not as simple as looking at just one number. Semis, detached houses, condos each have their own differences that can make prices move pretty differently. So let's break it down and look at it one by one. I'll start with semi-detached houses first. In general, there are less semis compared to other residential units in Toronto, and there's a higher demand because it's the least expensive type of freehold, driven mainly by young families wanting to move into a house and a lower percentage of investors. In April, in the middle of COVID-19, buyers and sellers took a pause because of the lockdown. Let's be realistic, moving isn't essential unless you have no place to live. So sales activities dropped by 45% and listings dropped by 51%. But did the fundamentals change? Instead of just looking at sales or just looking at listings, a better measure of supply and demand is to look at the sales to listings ratio, which shows the relative strength of sales compared to listings during a given time, where 50% means a balanced market. A higher number means a seller's market, and a lower number means a buyer's market. As you can see, it's very much a seller's market still. In fact, it went up a bit, so it's even more of a seller's market in April. The price of semis did drop by 5% simply because if you're selling your house during a pandemic, it's pretty urgent, so you're likely to sell for a discount. Now, move over 1 month to May when things started looking more rosy. Buyers and sellers came back onto the market and both sales and listings went up by 30%. Let's zoom out and look at the sales to listings ratio over the past year. In fact, it is very stable. It's pretty consistently a seller's market driven by real demand for housing, which means steady growing prices in semis, and now we're already back to pre-COVID-19 levels for semi-house prices. Let's look at detached homes next, and there's a lot of them in Toronto. Because it's more expensive, there's less relative demand compared to semis, and there's also more investors in the space. Just like semis, detached houses had a similar story in April. If it's not essential, there's no need to buy and sell. Sales and listings both dropped by 62%. There's a real need for housing here as well, so nobody is really in a rush to sell. COVID-19 doesn't change things, and the sales to listings ratio stayed the same, but as you can see, it's much lower than what we saw in semis, hovering closer to the 50% mark, which means it's more of a buyer's market. More of a buyer's market means that detached prices drove down in April because of the lockdown, selling at a 15% discount compared to March. In May, buyer and seller activity picked back up because things started to reopen. At this time, we also saw more listings from landlords wanting to take profit so they don't have to worry about what's going to happen in the next few months. On the buying side, there was lower investor interest than normal because of the same uncertainty, and you can see that the sales to listing ratio dropped below 50 into real buyer market territory, but really not by much. If you look further down in Q1 2019, the average was even lower than what we saw in April. So most buyers still believe that the market is priced right based on the real demand for housing, and detached prices recovered quite a bit in May, and it's now sitting at a 3% discount compared to March. Finally, let's look at condos. This is the segment with the most supply. At the same time, it has the most demand because of a lower price point. Here is an important thing to note. The type of buyers here are somewhat different compared to freeholds because it's not entirely based on real demand. There were condo owners who operated as Airbnb homes and enjoyed higher cash flows because of it. There were also speculative investors who were okay with negative cash flows because they expected annual double-digit appreciation based on what we saw in condos in the past 5 years. In April, condo listings dropped by 32% and this is low compared to semis and detached homes. With changes in regulations not allowing places to operate solely as Airbnbs, these condo owners faced cash flow issues and needed to sell. Speculative investors also left the market because COVID-19 became a game changer for them. So all of a sudden, there was a larger supply of listings, causing a fundamental decrease in demand and increase in supply in the condo market. This is really obvious when you look at the sales to listings ratio, which has been around 69% since 2019. In April, the sales to listings ratio hit 29%, which is very much a buyer's market, causing a 14% drop in condo prices in April. In May, there were more buyers because things were recovering and there was less panic selling. But if you look at the sales to listings ratio, it really doesn't look anywhere close to before at 40%. Right now, condos are sitting at a 5% discount compared to March. With a permanent change in demand, it's very possible that condos don't recover as quickly as freeholds moving forward. So where does this take us? Yes, there's still uncertainty for recovery and CERB payments are ending in July. But the government has done everything to help Canadians so far, which means it's less likely that they will let the economy crash now. In Toronto, our economy is strong, so jobs will be there when we reopen. The real need for housing held property prices up during the most uncertain times in Toronto, which means there's a higher chance for more stable prices as we continue to open up. Semis have already recovered back to pre-COVID levels, and we expect detached prices to head there next. Condos probably won't recover as quickly because their market wasn't driven entirely by real demand for housing, and they're now feeling more of an impact because of COVID-19. I hope I helped you a bit more with the May sales data. Instead of just looking at sales or just looking at listings, a better gauge of the market can be seen using the sales to listings ratio. With a buyer's market for detached houses happening right now, it means more bargain power, less offer dates, less bidding wars, and more buying with conditions. This situation looks even better for buyers with record low interest rates and strong supports in property prices. If you like this video, please give us a thumbs up and don't forget to subscribe to our channel for more weekly real estate videos just like this one. If you need help with real estate in Toronto, our team at Elevate is happy to help. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.